recovery orders surprise to the upside. Scotiabank. U.S.-China can balance roles in Venezuela. U.S. Energy says. Finland trade deficit widens in November. Canadian dollar slips further as U.S. dollar rebound dominates. Scotiabank. Gold trades on the back foot as a firmer U.S. dollar weighs.
Euro-U.S. dollar softens as U.S. jobless claims keep the dollar supported.
U.S. stocks may move to the downside in early trading. Estonian inflation eases to 11-month low. U.S. dollar rallies as GDP forecasts rise following strong trade data.
XRP under pressure as ETF outflows and retail demand wane.
Pound softness likely as post-rally consolidation continues. Scotiabank.
All right, are you guys ready? Guten Morgen. All righty. Bum, 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 bum. Bing, bada boom. Man, my phone is binging. Bing, bing, bing. Ding-a-ling. Jing, jing, jing. That was me. That wasn't my phone. But that's what it's trying to do. All right. Hey, good morning. Hey, sorry the office is messy. Yeah, it's been a long day already. Hey, so anyways, good morning. My name is Wayne. Got my British Racing Green on for you this morning. Hey, so we're going to do some technical analysis. We're going to do fundamental analysis. We're going to use the TRADARS analytical platform, and we're going to execute trades on Trader's Way, on our MT4. And by the way, if you like the charts that I use, you can have all the templates and stuff. Yeah. Sounds like a fair deal, right? So let me know how I can help. We have a lot of data. Lots of things are going on. And tomorrow's non-farm payrolls. Actually on a Friday. I think the last non-farm payrolls I did was on a Tuesday, and then a previous one was on a Thursday. It's been a long time since we've had non-farm payrolls Friday. So anyways, I'm kind of looking forward to getting back to the real world, back to normality. And also, hey, with all these holidays, boy, certainly good to be back to normal. And I say that because I love trading. And also like hanging with you. With all that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. Okay, let's get an update on the headlines. Wait, that doesn't kick it in? Hang on. It's supposed to kick in.
Yen stuck in tight consolidation as volatility erodes. Scotiabank. Turkey Treasury cash balance fell from previous 56.39B to 333.15B in December. Turkey Treasury cash balance dipped from previous 56.39B to 333B in December.
XRP under pressure as ETF outflows and retail demand wane.
Pound softened slightly as post-rally consolidation continues. Scotiabank. U.S. dollar rallies as GDP forecasts rise following strong trade data. Euro U.S. dollar consolidates as factory orders surprise to the upside. Scotiabank. U.S. China can balance roles in Venezuela, U.S. energy chief says.
Yeah, dollar's strong. We've been on that all morning already. Very cool. Let's go to the new situation report. Get our sit rep. This is where you should be able to find our YouTube webinars. And this is supposed to load the next webinar inside of traders.com, which is Monday, 7 o'clock in the morning. Because you're supposed to be front running the New York session. If you log in this time of day, and you're trying to figure out what to do, you've already lost. I'm telling you. You need to already be in your trades. The market is opening. You shouldn't just be figuring it out. But that's how you get to our training. Oh, is that right? You can barely hear me. Oh, I know what I can do. I bet you that's massively different, huh? It's a beautiful day. Don't let it get away. There you go. You've been blessed. I'm seeing a shift in risk sentiment today with the current risk score of negative 0.19, reflecting a decline of 2.40 in the last 24 hours. This change can be largely attributed to movements in the yield curve, and in particular the 10-year yield. Nice, right? So it's a nice little situation report, and it updates all the time. Okay, it updates all the time. Risk Radar looks at dozens and dozens and dozens of variables to come up with this. Now, we have a lot of new features already in 2026 that didn't exist in 2025 at TRADARS. So, for example, we have a day trader, swing trader, position trader, radars. So what it's doing is looking at how prices have changed over time, depending on your trading style, because if you're a long-term trader, you shouldn't be making decisions on a 15-minute chart. Your periodicity is incorrect. So day trading, the day trader radar is a radar for day traders that looks at how assets have changed in price over the last 24 hours. Swing traders, it looks at how prices have changed for all the different assets over the last 7 days. Position traders looks at how prices have changed for assets over 30 days. Now, all the prices are live, but the periodicity of the delta is different. The change, the rate of change. So, for example, we can look at day trading. Takes a moment to load because it's using live prices. For every asset on the planet. I mean, come on, bro. It's a lot of data. So again, we're just looking at what's hot and what's not right now over the last 24 hours. Okay? So today we're slightly bullish, but overall, as Aidan told us over in the situation report, we're generally risk off right now. But as of the last 24 hours, we're ever so slightly bullish. This is short-term versus long-term. Does this matter? Yes. Is one of them wrong? No. Is this good? Is it bad? Is it nothing? Well, that's for you to figure out through your analytics. Now you can sort all this and you're like, Wayne, I only do crypto. Okay, over the last 24 hours, crypto is down across the board. Isn't that nice? Wayne, what about stock indices? Wayne, show me Forex. Okay, now obviously that's not a complete data set, so we'll figure that out. We'll figure that out, man. But it's a neat new tool, right? So for example, Wayne, I'm a swing trader. I like to buy and sell and hold somewhere between 2 days and a couple of weeks. That's what this is for. And I believe I like this strategy of organizing our data based on your trading style. And so I may continue this theme throughout the analytical tools we've already built, but I maybe will add like toggles, so you or maybe in your profile you say, Wayne, I'm primarily a swing trader. I don't give two hoots about what's happening on a 15-minute chart, except for the buy a dip scenario or sell a rip scenario. I'm most interested in medium to longer term trends. Well, wouldn't it be cool if there was a button to say, I'm a swing trader, and TRADARS reorganizes itself to give you swing trading analytics? So that's a giant, big, fat maybe. What do you guys think of that? What do you guys think about that? Any feedback for me? But notice now we're looking at gold is up 2.34, 2.35, 2.36, 2.37% over the last 7 days. 2.38, 2.39, 2.4% over the last 7 days. 2.41. Look at gold going up. Okay, good. So something's happening in gold, but we're looking at it through the lens of a swing trade. Because it might be up today, but down in general. Okay. Now, gold has collapsed. It was doing really, really well, but it's not had a good week. Okay. Now, we're not specifically, okay, we need to go through this. Hang on. I think I just misspoke. So if I confused you, I apologize. Hey, man, it's hard to think and talk at the same time. All right. At least for me. In general, when you look at dozens and dozens of variables in the marketplace, from yield curve to the commitment of traders report, to dollar strength, to the direction of the stock market, to the direction or relative change in the VIX. When you're looking at a whole bunch of things like this, in general, it's been a bad week so far. Negative 4.5. Now, generally, it's not that bad, which is a higher time frame, 30 days versus 7 days. That's what's going on here. This is the general framework, general market condition. And then we can take a look at each individual asset over the last 7 days. And gold has been, oil's been down a lot. Now, this doesn't seem right. So it was doing that too. Somewhere else, it said gold was like down 280%. Like, that doesn't make any sense. So it's not down 26%. Maybe it's just a decimal point issue. And first of all, it shouldn't be reporting to that level. So it's probably down 2%, 2.6%, not 26%. So anyways, we'll iron out the wrinkles, but it's working. I mean, dude, this is awesome, isn't it? I love it. Yeah, I love it so much. I put this in the free membership tier at traders.com. Yeah, let me say that again. This is part of the free subscription. Yeah. Okay. And so we also have that for position trade. Same thing, just over 30 days instead of 7 days, so you can really get a grasp of the trend. Cool, right? Now, how do we get the scores of risk? Well, let's do our analytics. Is it risk on today or is it risk off? Well, as you can see, it's risk off. We ended December very risk on. Things have changed. Okay, things have changed. That's how we got our overall score. And then here's our calculations. Blup, 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 blup. Okay, here's what's changed. Okay, this is nice. Here's a, if your modality is text, if you like reading things, I put that there. Oil's down, Dow's down. Okay. Now, Dow, this has been, I don't think this is going to remain. In fact, I looked at it. I have to double check that. That's interesting. Because I thought the dollar index was strong. I analyzed this earlier, so maybe there's a glitch. This is how we do all our calculations. But there are still some wrinkles. Just double check everything as you go through it. Don't take anything for granted. It's coming very, very, very soon, Richard. Very, 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 very soon. Okay. Now, here is something very, very cool. Happy New Year! Liberation Day coming to Cuba soon? They lost Russia, they lost China, and now they have lost Venezuela? Yep, I think something's, yep, could be interesting. Oh, what? Data feed error. It's even funny that it would refer to it as a data feed. Let's see if I can kickstart this. No, the whole thing is going to glitch on me. Let's try this again. If it doesn't load, I'm going to be very disappointed because it's so good. Let's see. Over here. Okay, hang on. Let's see if I can fix this. This is worth it. I wonder if it's a price issue. Let me double check. Uh, let me check the feed. That's it. The feed. Interesting. Okay. I can fix this. I have to do it on my other machine. Hang on. Let me do it on the other machine. All right. I think that will fix it. Let's see the data feed. I had to reboot it on the server. If you don't have prices, it makes it difficult to perform analysis, right? Let's see if I can pull it now. Every day we're learning how to stabilize all of this data. Just imagine there's tens of millions of data points. And all of this is using AI. All of it is using server resources. All of it is burning through our NVIDIA chips. So every day we're there we go. So every day we're learning how to optimize and make all this much more efficient. We're not quite there yet, but every day is better. Cool. All right. Hang on, I gotta get this. Oh, what? Hang on. I don't know why I did that. You were on live coaching? Yeah, so what did it put you on? Okay. So let me show you what this is doing, guys. Okay, we want to know the short term, the medium term, and long term trend. Am I right? Why does that matter? Well, if the long term trend is up, but the short term trend is down, that's a dip. Well, if the long trend is up, you want to buy dips, don't you? And so that'll show you either ridiculous amounts of strength in an uptrend if everything is up, but there are situations where there's a short-term dip and you want to buy the dip and then get back into the long-term trend. Does everybody understand that? Even if you're a scalper, you need to know your short is only short term. It might be down today, but it might be up all next week. So you have to say, well, I'm going to day trade this down and then I'm out. Ish kaputya, because you're trading against the long-term probability. But also, if you bought a dip because, let's say, it dropped to support and then it reversed on a small time frame, you buy it. But now you should know that based on what it has been doing, shoot, it might be up, it might be long for the next 2 weeks. Okay? So we need a way to say, I need to analyze every asset that I like to trade on 3 time frames and specifically analyze the trend, not on an oscillator, not on a moving average, not on counting Elliott waves, but I want to know statistically, aka mathematically, is it up or not? Not an opinion, not connecting candles, not a candlestick pattern, but pure mathematics. Y equals mx plus b. And then, Wayne, instead of trying to connect the highest highs and lowest lows and drawing channels, which can be subjective, and calling that a pattern, because remember we used to do that, we don't do it anymore. Instead of drawing a pattern, Wayne, just do the math. Instead of connecting highs and lows, which is subjective, look at the standard deviation in price over the period of trend that we are calculating, meaning short-term trend, medium-term trend, long-term trend. Then inside of that, calculate the mathematical standard deviation, and then do some linear projections. Oh, well, that's easy enough. And Wayne, do it on 3 time frames. and then let me choose which ones I want to look at, and then keep that setting so I can go through dozens of assets quickly. So, but again, not looking at patterns. Is everybody following me? No more looking at patterns. This is a mathematical way of doing price action. A statistically mathematical way of doing price action on 3 time frames. Are you ready? So let's isolate dollar pairs only. Mohammed says, but how's the standard deviation would you help? Well, because what you're trying to do is, okay, like let's step back and talk about it from a trading point of view and not a statistician point of view. Okay. If you can prove that the long-term trend is up and you are looking to buy a dip on the short term, you need to define what short term is and what dip is and how dippy is the dip. How much of a pullback is a pullback versus if it's too much of a pullback, it could be a reversal. You see? So there's a pullback, there's a reversal. Goodness gracious, great balls of fire. What's going on? Let me double check the feed. Something is killing the feed. Is it just dollar pairs doing it? That's an interesting bug. Okay, there's no crosses. I knew that. Yeah. Okay, and it doesn't bug. Weird. Interesting. All right. So anyway, so that's what you want to know. So standard deviation on the short time frame. Okay, Mohammed Yosef, if you want to look at the standard deviation on the short term so that you can do a linear projection to say, based on the short-term trend, where are we projected to hit? And then you look at your charts and say, ooh, well, that's a buying pivot point, or, oh, that's a psychological level, or that's a role reversal. Or you notice that there's a moving average crossover back up, or an oscillator crossover back up. And now your technical analysis on the short term has more weighting because you put it in the context of the long-term trend. And so it helps you analyze the context of the opportunity or the threat. You see? All right. So would you rather see some colors? Or at least in this case, some charts? Okay. So let's turn them all off. That's the USD CAD. Is this bullish or bearish? Well, Mohammed, yeah, that ends up being very, very similar mathematics. Yeah. Pivot points, moving averages, Fibonacci, standard deviation. They're all different forms of math that kind of tell you the same. Okay? And so in this case, I might use one of those other tools on a different, or not a tool, but indicator. I might use an indicator like that on a different tool, but on this tool, we're only analyzing trend, and I'm trying to take subjectivity out of it. And so therefore, I'm relying on, things like calculate the slope of the mean, okay? And the standard deviation of that mean, okay? And then, so you can see now a bunch of things. What do we see on this trend? Okay, it's a swing trade, long-term trend. This goes all the way back to the beginning of the year. Okay, the slope is a positive integer. The slope is measured as 0.00011 per hour. Well, that's just a simple linear projection, okay, of the standard deviation of the slope of the mean. Okay, Mohammed? Yeah. So, the cool thing about this, about TRADARS, is everything you see I have personally built with, and it's all based on the math in my brain. Right? So I've done this. This is mine. I built this, but I built everything. And so there's nothing hidden. And in fact, most of the pages, it'll give you a deep guidance into the mathematics, because I want to provide the transparency. I don't want this to be a black box. Another thing that I want to make clear is most of this is not AI making some random projection, like a big, giant, stupid guess. AI is quite dumb. So don't fall into the trap where you believe artificial intelligence is a genius and you've built a neural network and it's going to predict the future because it looked at 4 billion different variables and it's smarter than all humans put on Earth, and it has billions of years of knowledge and it knows exactly what's going to happen 6 days from now. No, don't believe the hype. Hasanico, can I get this through to you? My 98s are booming in my trunk with funk. All you punks can't stop my dunks. Whoa, whoa, whoa. Sorry. 90s flashback. Don't believe that. So we do use AI, and we use our own large language model that I personally have customized around the way I do fundamentals and technicals. Yes. Aiden knows how to trade like Wayne, like you might have learned at FX Bootcamp 20 years ago. Okay, that's great. But most of this is an analytical tool that then Aiden will look at. For what this is doing here is pure mathematics without any dumb AI. The bottom line is, this is bullish. If you can't get to that point, you have a much bigger problem as a trader where you can't look at this price action and know it's bullish. Okay? But this is it. It's very bullish on this swing trade time frame. And then the top of this channel is not connecting this per se. It looks like it is. And most of the time when you're doing your own technical analysis, right? Like, where's my drawing? Hang on. If you were on a chart, you would draw a line like this, wouldn't you? And you're like, yeah, well, so did Aiden. Okay, that's great. How would you draw the second line? Would you draw it like this? Would you draw it like this? And you see there's a difference, isn't there? And over the bigger the time frame, the more disaggregate, the more they are dissimilar. And it matters. So that's subjectivity. You drew it this way, I drew it that way. And eventually this could become instead of a channel, you might draw it as a wedge, you might draw it as a triangle. And all of a sudden we're all drawing our patterns differently. Now, the previous version of TRADARS used pattern recognition. And I've never been an amazing fan of pattern recognition. I use it, but I don't use it. I like it, and sometimes I don't like it. And again, I get bugged out by the subjectivity. So in this case, it looks like we're connecting these two, but we're not. It's the standard deviation mathematics. And that's why you can see the bottom of the channel doesn't actually even touch most of these support things, but it's because we're basing the channel on standard deviation. And that is based on price action, which isn't theoretical. It has happened. Okay, great. So there's the long-term trend. It's up. Okay, great. So what is it that we want to do? Well, if we were only using this time frame alone, you want to look for plan A. I'm not doing price action now. I'm only using how to use the channel. Okay? Or plan B. Okay? Anything below the channel is no longer channeling. And by the way, this updates a lot because these prices are low. Okay? Well, this doesn't, standard deviation doesn't show you resistance or as you say, extreme. That is not a use of this mathematics. Now, I'm not saying it's not important, but we have to use different mathematics for that, and we do it somewhere else. But this is simply a trend. You can't argue this. This is up on this time frame. That's that. Okay, good. Is this chart on a specific time frame? Yes, it is. Okay, but what we're looking at is going back over time. So now, let's get into it. Different slope. Okay, it's more bullish. Okay, so think of the swing trade as this week. Think of the day trade as, it's a dollar issue, isn't it? I'll bring it back. I have to figure out what's bugging it. It's fabulously interesting because I have to figure it out to fix it. Yeah, now Muhammad's like, wait, you can add and reduce time frames? Yes. So check this out. Let me, because I think you get the idea now. But you have, let me turn them all off, and then let me show you how you can use it. Okay, short term, medium term, longer term. Okay, they're all pointed up. Okay, now, and there's a slight shade on them, which I like. Okay, long term, here's how I would like to use this. As a swing trader now, I'm saying I want to use this as a swing trader. Long term is up. I'm a bull. Is this a good opportunity to buy? No. I'm statistically overbought. So I want to buy a dip. So I need to wait for a dip. Is that a dip? No. I should have bought down here. Cool. Now watch this. So I've toggled long term and short term. Check this out. It'll remember on all the other charts. You ready? 3, 2, 1. Okay. Bullish. Okay. Was bearish, now turning bullish. Okay. Is this a dip? Yes. Is it an opportunity to buy? We're 2 standard deviations from the mean. So this could be an amazing opportunity or a threat. We don't know. So now you want to do technical analysis and say, well, you don't really want price to drop any more than it has. But what you want to look for as far as your opportunity is, will this short-term trade now turn bullish? Have we dropped to a daily pivot? Have we dropped to a psych level? Have we dropped to a fib? Have we dropped to a roll reversal? Is this the dip I've been waiting for in my long-term trend analysis? You need to, if you're a bull, dude, you need to open this chart and start analyzing Aussie dollar for a change in direction to the upside. Now you might use Elliott Wave. Now you might use MACD or stochastics or RSI, all that kind of stuff. Now you're using moving averages, but now you know what to look for. You're very bullish and it's been bearish for a while. This might be the opportunity because you're 2 standard deviations below the mean. Oh, it updates near real time. Okay. So it remembered the long-term trend is down because remember I turned the scalp off at the upper one. So if I turn the scalp on, there we go. It's okay. It's turning more bearish in a bearish trend. That might be a good opportunity. Okay. This is cool, right? And it remembers. So now let's do Swissy pairs. Look at that. Up in an uptrend. Sideways in an uptrend. Okay. Downtrend up. So something's changing in Euro Swissy. Okay. Up with a pullback. That might be interesting. Up with a pullback. That might be interesting. Down. Ooh, that's so different, right? It's so different from the other charts. So we lack congruency here for sure. Yen down with an up with the down with an up with the down, down with a down with an up, or down with a flat. Definitely lacking congruency. It kind of feels like a Thursday before non-farm payrolls. Crypto, Bitcoin, up with the flat, 2 standard deviations from the longer term mean, huh? See, there's the upper standard deviation, came down. The lower bound, in theory, we head back up. Look at our swing target back to 96. Based on the slope at being 18.04679, which is 0.0199 per hour. So every hour this is updating the slope of the mean by dropping the last one and adding to the new one. And then you can calculate standard deviation and then do linear projections. And that gets us to here in the future. Yeah. Where have been the last few weeks? Well, let's see. I went to Florida, specifically Tampa. I went to Tampa. I went to Amsterdam. I went to London. I went to Dubai. We had Christmas holidays. We had New Year's holidays. Yeah. Yep. Other than that, not much. All right, cool, right? So I'm going to remove this news radar. I'm going to build a new one, but I'll tell you what I'm going to add probably over the weekend. I'm going to get rid of this. And I'm going to add something new. For that, we're going to have to go to the fundamentals. Now, the reason I need to move them because when you join at TRADARS.com for our free subscription, you get the Squawk Box, you get all the market radars. So the situation report, the day trader radar, the swing trader radar, the position trader radar, the risk radar. You get this trend radar, which is amazing. Like all of this for free, right? And then I want to add something here, which is currently under fundamentals, but you'd have to, because I use a freemium model, you'd have to upgrade to get this other tool, but I want to give you that tool for free too. So I got to move it from the fundamentals to here and then remove that because I'm not happy with it. I want to build a newer, better version. And oh my God, this is relentless, right? But let me show you what I want to give you for free. It's under fundamentals. And it's under our asset radars. I'll let it load so I can have a cup of coffee. Oh, that's good. Come on, heat map. I didn't know it was going to take this long. It has to do all these calculations. Yeah. What motivates me? I like you guys. You guys are my friends. Okay. All right. Here's the tool I'm going to give to the free members. And you might recognize this or something similar to TRADARS 1.0. I've rebuilt it. And it's good. Let's see if you remember it. The scatter plot's back. How lufle tulium. Now, you ready? We track things like wheat and Ethereum and soybeans. Okay, now, are you ready? So we've added, right? We've added some assets. As a reminder, and all our methods are down here if you're not sure how to use a scatter plot. Okay, but the bottom shows all our score sheet scores, our bias, our bullish or bearish bias based on technical and fundamental analysis. Oh, we can get to that, TT. That's easy. That's under this econ radar. Okay, but anyways, that's easy. All right. So we've had assets, and here's the bias. Everything to the right has a positive score. All the assets to the left, like Aussie dollar, has a score of -5. You couldn't get more bearish. So we're extraordinarily bearish on Aussie dollar. We're extraordinarily bearish on the Dow Jones. Okay? But the Dow, we're only bullish 3.6. So we're more bearish on Aussie dollar than we are a bullish on the Dow. Now, to get to that score, we have to do macroeconomics, technical analysis, COT positioning, seasonality, and dozens of other things for the Aussie and for the dollar, and then do comparative analysis, and then come out with a combined score, which is very bearish. So we're bullish on the dollar, US dollar, bearish on the Aussie dollar. We get this score. That's the first thing. Now, the other axis is showing what's actually happening now, today, in the moment. And most assets are up 0.5% or down 1%. Some things are more down, like 1.5%. Ethereum is down Very significant. Okay, cool. So now we're able to almost compare apples to apples, if you will, where we're comparing long-term fundamentals, we'll call it. There are lots of technicals going on. It's analyzing charts and stuff. But let's just say our bias, our long-term bias is on the bottom, and we're comparing that to short-term price action now. Because you might be long-term long Ethereum. We're modestly we're modestly bullish on Ethereum. But today has been a bad day for Ethereum. Well, that might be an opportunity for you to buy a dip. We don't know. We're not looking at a chart, but we are analyzing the price change over the last 24 hours relative to our long-term score. Now, our long-term score changes a lot because we are doing technicals and fundamentals and seasonality and COT positioning and all this stuff. So both are flexible, but right now we're somewhat bullish on a bearish day. Soybean, okay, great. Now these like wheat and soybeans, they might be outliers. There might be weird calculations going on. But everything else looks right as rain. Cool. Now, you're like, but Wayne, it's so hard to see the individual assets. And besides, I don't trade soybean. I only trade Forex. Ha 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 ha! Whoa, what? Wait, I only trade Forex? Now, there's supposed to be more than dollar pairs, but anyways, those are the dollar pairs. Not much has happened. Okay, the biggest loser right now is Kiwi dollar. Cool. Wayne, what about stock indices? Whoa, look at the dynamic animations. Okay, Nikkei is down, which means the yen is probably strong, right? You should know that. We have correlation tables so that you know things like that. Nikkei is down, the dollar's probably strong. Nasdaq's down, the dollar's probably strong. S&P 500 is, well, not up, right? So the dollar is probably strong right now. It's nice, right? Crypto's down, dollar's probably strong. Now you can do your commodity. Okay? Oil's down. Oil's price in dollar. $1 buys more oil today than yesterday. Partially, perhaps, because the dollar's strong. Isn't that cool? Now, let me blow your mind. Is that normal or abnormal? Should I be worried about the dollar strength or is it short term? Well, I can go to seasonality, change this to the dollar index, and show you that it's absolutely, totally normal, boom, boom, for dollar to be strong. And I can tell you how long, because I have the data. Dude, shut the back door, huh? Yeah. So anyways, that's been added. Okay. That's been added for you. So would you guys like me to move the scatter plot out of a premium subscription and move it to the free subscription? I can do that for you. Bum, 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 bum. For sure, says TT. Never mad at the fact he's corrupt like a senator. Soul in a rope, but you treat it like soap on a rope because my beats and my lines are so dope. You are so generous. Oh, but the thing I love best about me, Denise, is my modesty. All right. Never gets old. Never gets old. All right. You ready? You guys remember the patterns we used to do? Patterns. Remember the patterns? This better load, you sons of biatches. I'm yelling at the Aiden. You better load this, Aiden. Okay, he loaded it. Good. We're doing technical analysis now, not pattern recognition. Phooey! Phooey pattern recognition. Yeah, let's just do technical analysis. And just so you know, okay, these are the charts that I've been using for 20 years. Let me just do a clean version. Template, I think that's position trading bullish buys. Or it's a variation. There we go. All right, this is what I've been doing forever. Here's my projected low. Here's my projected high. Guess what? Nailed it. It's so easy when everybody's trying to please me, baby. So now let's go to a dollar pair, if you will, and we'll go to here. And let's do a basic version here, euro dollar. Go out to a different time frame. And you can see, right? Projected low, projected high. We hit it, came back around. Here's our current projected low. Okay, cool. So we have this, and then you have different time frames. This is, right, monthly pivot points with 4-hour candles. But we can go to swing trading bullish bias, and this should be 1-hour candles, okay, with weekly pivots. And then you can then change it again and go to day trading bullish bias. Okay. Now there's a lot going on here. Is this bullish or bearish based on this time frame? You might be a long-term bull, but is that bullish or bearish? And do I have my pivots set properly? What if you don't know pivots? Dude, check this out. Dude, shut the back door. Okay, check this out. These are the pivots. 15-minute chart, daily pivots. Okay, and we are bearish. A quant score of negative 0.22. Euro dollar usually falls in the month of January. Okay. Best case, worst case, base case. But we are a bear. So I'd like to actually put that on the other one. We're bearish to neutral, actually, right now. So it's really looking at this with crazy detail. So we're looking at it on the 1 hour, right? Like if you're a bear, that's an easy sell. I mean, dude. Okay. But it's not as easy on the smaller time frames, huh? So anyways, we are doing this for you automatically. So pound dollar might look like see, we're bearish, but there's a warning. What's the plan, though? I forgot to cover this. What's the generalized plan? Well, let me get my drawing tool. Hang on. Snip. No, Epic. I need to get my EpiPen. Let me put the analysis back. Okay, delete. Okay, so we're a bear with daily pivot points. Great. What do you notice about these pivot points? They're only bearish. You see this? Bearish, sell at M3 to central pivot point, target M1, S2, stretch goal S3. No, this is bearish. With a warning. Okay? So cautious, but what's the general plan? That's the general plan. But there's a warning, so be careful. And if you look at the standard deviation, the linear projections here, it's not doing what our strategy would like. So the pivot points are based on strategy. The warning is based on the fact that price is above the moving average. Okay, so there again, long-term versus short-term. Okay, we're bears. What are the selling pivots? Somewhere between M3 and the central pivot. What's the general target? Somewhere between M1 and S2. So what is the strategy? A variation of this throughout the day. You have to understand strategy before you can do any tactics. Okay, so we have been falling. We just haven't been falling recently. How do I know that? Look at the slope of the trend. Remember how we were doing that over on the trend radar? Well, it's doing it here too. And it's saying, well, the moving averages are bearish. The oscillators are bearish. But the price action is neutral. So strategically, we're hoping for this throughout today. It's just not quite happening. It's not happening. It's just not happening very quickly. But also, this is just doing technical analysis, not statistical analysis anymore. I mean, a little bit for the trend and the projections. But the basis of all of this is technical analysis, using price action, using pivot points, using moving averages, using oscillators. All of this is being done automatically, 24 hours a day. And so our strategy would be here, but it's not thinking, well, tomorrow's non-farm payrolls. I don't want it to. I just want it to do pure technicals. You're supposed to say, well, this makes sense. We're losing volume and volatility because tomorrow is a risk event. Well, you should at least be able to measure if you thought today was maybe a benign day because people are going to conserve their capital because of non-farm payrolls tomorrow. Then you should measure whether you're correct or not, because if you were not correct and today's a big day to the down, shoot, get on it, boy. What are you waiting for? Versus, yeah, you're right. Right now, the slope of the mean is flat on the short-term time frame. Okay. Now, look at the new moving average crossover on the USD yen. Look at the base case. Look at the best case. Best case scenario based on what's happening right now. Aiden believes on this time frame, USD yen is bearish. We have a new moving average crossover and a 2 standard deviation target at M1, which is our strategic plan anyways, statistically confirmed by what is actually happening in price. That's a lot of information. Okay. And all of this is dynamically done. Isn't that great? It's great. Cool, dude. So we have this for pretty much everything. And we can isolate by dollar pairs, yen pairs, Swissy pairs. You can isolate by crypto. You can isolate by stock indices. You can isolate by commodities. Bitcoin is back above 90,000. It was slightly below an hour ago. It is still technically bearish. What's the day trade? Because don't lose sight of the fact that this is a day trading radar. This is the strategic plan, isn't it? There's nothing on this chart. So this is not a generic pivot point chart. It's not a generic draw an indicator. Okay, so like on your MT4, MT5, you can say plot pivot points. But what's more difficult is to say, hey, MetaTrader, you tell me, is this bullish or bearish? And based on your decision, only plot the pivot points I care about and remove all the other ones that I don't care about because it's too confusing. Just make it simple for me. And in fact, and then tell me, well, that's not really what MetaTrader's platform is about, right? But we can. Here's your strategy. Okay, here's your strategy. Here's your strategy as a day trader. Now, strategy doesn't mean it's going to happen. So now you got to do your tactics, and you're going to look for, is this what's happening over the next few hours? Is this up pullback going to set a down later the day? Is this up pullback going to set up a down later today? Well, that's your job now. That's what you should be doing now. You should be opening your charts and looking for this. Are we on our way down to this target over the next few hours? That's what this is all about, day traders. Market opens. Are we taking it down or not? But as we saw in the trend analysis, today's down might be part of a bigger up. And this is why I'm building these tools, because many new traders struggle with this idea of long-term long, short-term short. Bitcoin was at 85. Now we're at 90. So is that bullish or bearish? I don't know. Some people think Bitcoin's going to 200,000. But today it's down. But this week it's up. It's been down for a month, but in the future could double. Do you understand where people get lost here? So I'm taking it upon myself to use technology to analyze millions of candlestick data, and taught it how to do technical analysis the way that you and I do, and then do all of this on your behalf so you can make better decisions, even though multi-time frames is crazy confusing. But now we have tools to bring clarity. So, give me an example. Okay, well, Bitcoin, short-term short. But we have swing trading and position trading. So Aiden, I noticed the color change. Yeah, well, I'll fix that. Aiden, show me Bitcoin long-term. Now, hopefully it does this. This is all tricky. There's a lot of calculations going into this. There we go. Long-term, we're bulls. What? Long-term, we're bulls. So what do I see here? Annual pivot points. Yearly pivot points, everyone. Yearly. Okay. Now, is this important? It is important. Okay. Because it's doing yearly YM3, for example, but it's also looking at monthly. See these? And what else is it doing? It's looking at a confluence of yearly and monthly pivot points so you can see them overlap on multiple times. Cool, right? You're like, well, Wayne, that's too esoteric. I want to know what's happening sooner than later. I don't care where we're going to be in November right now. So you're a swing trader then. Hey, Emil. Hey, Emil, are you unlocked on AI level? Do we get you set? All right. What are we looking at? Okay. We are bullish as a swing trader on Bitcoin. Seasonality, the month of January is bullish. We have some confluence between what? Monthly pivot points and weekly pivot points. Dude, what? Okay. So our general strategy, okay, is this for Bitcoin. Cool. But what we were warned about days ago is that when we get to this overlap, you see confluence warning, monthly R1, weekly R1 overlap. When we get to this price, expect it to act as resistance. And it did. No, I know, Emil, but it was, oh, and Calvin, yes. Log out, log back in, and you guys should at least not be stuck on free. Now, you're supposed to be set to the proper subscription tier, but some people say not necessarily. So, Calvin, log back out, log in at traders.com, okay, and get back in. All right, so let's go back. So we had an up earlier. Then we said, be careful around this overlap of weekly, monthly pivots. It should act as resistance, and it did. Thank you very much. And then if we are going to here on the long term, what's next? Well, we have base case and best case scenario based on what's actually happened so far. So maybe this is our plan. It's mathematically possible. And if it starts to move back up and make a higher high, it's going to become more, not possible, but more probable, because that would raise the best case scenario and the base case and pull up the worst case. But isn't it nice to know that there's a shorter term linear projection up, that there's multiple time frames of pivot points, and we're looking for confluence? Okay. With short-term fundamental bias and long-term fundamental bias. That's neat, isn't it? So looking at this, okay, we double bottomed on today's buy zone. How does that make you feel inside? Squishy like a gummy bear you've been carrying in your pocket? That's how you make me feel, baby. Now, Richard, that is not scheduled. Okay. On the issue of building a trend radar that helps you analyze statistical trends on multiple time frames, so you can align long-term long with short-term short and all that kind of stuff. And then having different radars for swing traders, day traders, position traders, having different pivot point type of analysis. Is that right, Emil? Okay, I'll continue to work on it. It was supposed to be fixed. I worked on it. I was told it was fixed. I'll continue to work on it. Sorry about that. Okay. This is like the fourth iteration or fourth tool I have built for helping you guys do multiple time frame analysis. So, for example, if you looked at dozens of assets, how long would it take you to go through dozens of assets and show me just the assets that are trending in the same direction on 3 different time frames: short term, medium term, and long term? Oh, dude, that would take you a morning. I'm already done. What? So we do full spectrum analysis for you at TRADARS now too. So now you can just look at the assets that are trending on 3 time frames and just jump to this page immediately and then look at the assets that are moving and then go to your charts. Look at this, dude. And looking for overlaps. Isn't that interesting? So look at, okay. Isn't that neat? Confluence. So now we're looking at assets with congruency on 3 time frames, and it just tells you, boom, 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 done. Okay, next scheduled webinar is Monday. Well, Mohammed, everyone would use it differently because of their different trading styles. Now, and also different use cases. Like if we go to fundamentals and we go to the econ radar, you're like, Wayne, I'm interested in trading oil. Okay. Now, this is, oh, what? That is strange. Interesting. That shouldn't be. Real estate? Maybe this will work. Yeah. Okay. So many of the tools are pure analytics, Mohammed. But why, as traders, why do we give 2 hoots about real estate? Well, this is a key component of I inside of GDP, which is C plus I plus G. And you might just be doing analytics on the health of the economy. And you should know, for example, that we have 7.4 months of inventory, but inventory is collapsing. Home sale, right? Medium home sales, the price has been falling for a while, but maybe is stabilizing. New houses are being built. New home sales are rising here. Existing home sales, modestly, but year over year down. So look at, People are buying new homes, not existing homes. Why? They're probably priced about the same. So why would you buy someone's throwaway home when you can buy a brand new home? Mortgages are coming down. Maybe that'll spur the economy. Maybe that helps us predict future Fed funds rates. Maybe, I don't know, but it's pure analytics, right? We have non-farm payrolls tomorrow, which we will go over tomorrow over at FX Street. Remember, I'm at FX Street tomorrow. Okay. And we can go through all this data. Cool. Nice, right? Yeah, totally nice. We got JOLTS, average hourly earnings. So this might indicate a fall in inflation. And for some reason, NFP is not appearing, but we're at 4.6. Okay, cool, right? Yeah, it's very cool. So you might be pure analytics, but you also might be much more focused on just day trading today because you already made these decisions, because you already went through these tools. You already know if you're a bull or a bear. Like I already knew dollar is supposed to be strong because I've been trading for decades and I already understand seasonality, and dollar's strong right now, and I find that completely normal. Other people are flabbergasted. Well, I already know, but I just double checked today, and it's right as rain. I am correct. If you look at the U.S. dollar going back years and years and years, January's up and February's up. I know it. So now I can then say, look for opportunities in which dollar is strong and then find ways to get in. Well, what does all that mean? Is it trending down? Where's the resistance? Where are the pivot points? Where's the confluence? And these tools are doing that for us. So you might need to get that detail first and then drop into things that are doing much more statistical and technical analysis versus fundamental analytics. Not sure why that is so slow today. Check the feed. Anyways, India M3 money supply 12% December 22 versus 9.3%. United States EIA natural gas storage change registered at 119B below expectations, 109B in January 2nd. XRP slides as institutional and retail demand falters.
Japanese yen stays under pressure as resilient U.S. data lift U.S. dollar, yen. U.S. trade deficit shrinks to smallest in over 16 years. In October, Kiwi dollar, U.S. dollar drops on Asia tensions, firm U.S. dollar ahead of NFP.
Zcash price. Forecast ZEC downside risks escalate as core development quits amid internal disagreements. U.S. weekly jobless claims inch up slightly less than expected. Cool. And that should bring further dollar strength. So that's that. I will see you tomorrow at FX Street. Is everybody signed up? I can get you the link. I just have to log in. I'll do it. Let me get you a link, because if you don't have the link, you can't get in. Can you guys give me a minute? I'm assuming you want to attend. I have to log in. Got to confirm my login. Jiminy Cricket. Okay. I got to go to here. And then I got to go to here. And then I got to go to here. And let's see. Let's bring it up here.
U.S. labor productivity surges 4.9% in Q3, much more than expected.
All right, here you go. Please sign up right now. There's no other way to get the link. And I promise you, I'm not going to spam you full of sales emails. This is not a sales funnel. If I just showed you all of this and you're like, Wayne, I don't even want the free account. What the hell am I going to do to sell you via email? Look, it's either the most amazing thing you've ever seen and you totally comprehend the possibilities, even if you don't quite understand what's going on some of the fundamentals and the seasonal stuff. And, dude, this is why we have live coaching. So it speaks for itself. You either think it's the world's greatest thing and you can't wait to join, or you don't. Well, get the free account. It's not going to hurt. And sign up here, but I'm not going to sell you. Sign up here, and you'll get the link to tomorrow's non-farm payrolls, and we'll do it together live for 3 hours, bro. Yeah. And by the way, wouldn't it be cool to have the full version of traders.com, but have your broker pay for it? Wouldn't that be neat? All these things are possible. Okay. So that's how you get into tomorrow's live stream. And you only have to do this once, by the way. You won't have to do it every month. So I'll invite you to the next one and the next one. It's really, really straightforward, very simple. So I hope you're happy. Are you happy? I'm happy. If you're happy and you know it, clap your hands. Life is great. Life is good. Life is beautiful. I love being a trader. I love being an investor. I love working for you and with you. I love our friendship and our relationship. 2026 is an amazing year. And I'm hoping with these opportunities in front of us, as far as leveraging the latest technology in the entire world, I'm plugged into 15 different government agencies, bro, so that we know what's going on. I love that. So that only opens the door of getting good data that's more easily understood so we can make better decisions, and then be able to filter through dozens of assets, which would be hundreds of charts, doing all the analysis down to moments, not hours. So suddenly you can just look at the charts on TRADARS and recognize them as if they were yours. And like, well, look at these 5 things. Don't look at all this other stuff. And you're like, oh yeah, that looks good. Oh, and I missed that pivot point. Oh, those are great. That's what I'm going to do today. That's what I'm going to do this week. That's what I'm going to do this quarter. Dude, that's gotta help, huh? So have a wonderful day. I'll see you tomorrow.